More on what's happening in the banking sector. And of course, we have been watching the latest developments, 3 lenders collapsing in the span of a week, and what this means for smaller banks. We have now seen Moody's sort of come out belatedly saying, well, there's a problem here.
Right, right. What Moody's did today was, or actually late yesterday, was cut the outlook for the entire U.S. banking system to negative from stable. And they did this as they cut the outlook for 6 regional banks. Some of these banks have seen big stock drops, more yesterday. Today, there's been a slight recovery in them. Yeah, you're looking at a banking system that's not as healthy as it was just a week ago.
In the meantime, when it comes to the future of SVB, or at least its component businesses, we've seen interest from some of the largest PE firms, right? Apollo, Ares, Blackstone, Carlyle, KKR, have all been circling around the loan book. What parts are they interested in, and what's kind of compelling about this?
Sure, yeah. I mean, there's multiple parts to SVB. It's not just the bank that we all know failed, like last week. There's also there's a loan book that the private equity firms are interested in. It's about a $74 billion loan book as of the end of last year. And those are loans that have real borrowers who are paying their payments. And so companies like Apollo, Ares, KKR, as you mentioned, Blackstone, are interested in those loan books. Blackstone also is looking at other parts of SVB potentially as well.
It's all about regulators trying to figure out what's going on over there, and they're specifically looking at executive stock trades at SVB. What do we know?
Yeah, we don't know a lot yet. We do know that they're expanding, regulators are expanding their investigation into the collapse to the stock trades. We did report, I believe late last week, that SVB's CEO sold about $3.6 million of shares not long before the failure. That was a pre-planned stock sale, so that may not be the issue at hand. But often, there's a lag between when these sales are happening, when they're reported. So, they're looking into other stock sales as well. We don't have a lot of information yet, but we do know that they're concerned about executive stock sales. Often executives have a lot more information before the rest of us do, and if they're trading on that before the collapse, then that could be a real problem.
It's really interesting what we heard from the new CEO of Silicon Valley Bridge Bank, really asking for depositors to come back to the lender to help them rebuild, and actually forging the argument that with the backstop, this is now actually the safest place in the United States to put your money. Do you think that process of rebuilding confidence is going to work, I guess? And also, to what extent does it actually help potentially reshape what becomes of SVB, given that we know there's a high likelihood that it's going to be broken apart into different pieces?
Yeah, it's a great question. I mean, obviously what did happen on Sunday was that the regulators took an action that basically makes every deposit across the country and all the banks, insured or not insured, safer. I mean, they're basically saying that if you have deposits at a U.S. bank, you're guaranteed. So, SVB's argument could be that this is a great brand. You've done business with us for years. We're incredibly well known, especially in the Bay Area in California. Very well known in the tech sector. Come back to us. Keep doing business with us. You know us. You've liked us in the past. We had a brief blip there, but come back and do business with us. And because of the Fed's actions, the FDIC actions over the weekend, that you're assured that your money's safe. So whether that argument plays out, whether people go with that or they move their funds to a better, well-known bank, it remains to be seen, of course.